Yeah, it's interesting. You know what? Like, I think you spelled it out pretty well there, Tyler. At the end of 2021, when the Fed basically said they were going to battle inflation by raising interest rates, what got hit first? And even in anticipation of their acknowledgement that they kind of, let things run too easy for too long, we saw high valuation tech stocks, we saw SPACs, we saw crypto, we saw a whole host of things start to sell off. And that's the thing that I think we all grew up with in this business, with higher rates, and that should be applied to, investment returns going forward and the valuations that are being applied to such. So the reflation that we've seen as rates have gone higher in 2023, at some point something does have to give here, okay? So to me, I think that there's really a small shortage of names that are benefiting from an excitement around a new technology. We've talked about that a lot here. And I think that as we get to Wednesday's earnings with Nvidia, we might start to see it's as good as it gets for the next couple of quarters. And that's when investors might start to readjust. You mentioned Palo Alto screaming today after they reported results. A lot of their peers had disappointing results at a high valuation name, and it rallied a lot, but it's still well off its high. So I guess my point is we got to take some stock where some of these stocks, have been and where they're trading now. Tesla's another example. To make the move like it did today after it sold off from 300 to 215 on Friday's close, it's not that impressive to me.
Julie, I don't mean to put words in Dan's mouth, but what the hell? I do mean to put words in your mouth. So he makes the point here that maybe this, when we hear from Nvidia, that there's a possibility that may be a kind of high watermark for the AI stocks, I guess you'd call them.
I think that makes sense, right? Because Nvidia is really ground zero for one of the very few companies that's actually able to see and recognize revenue from AI today. Most of the software names that are kind of incorporating AI into their businesses, they don't even really have a very clear business model around it. So, I think that makes sense that it's, as the kind of the Pied Piper that's led this rally, that this would be the business that, could mark the end of it. It's really hard to say. What I do think is important is kind of keeping in mind the balance of power between the U.S. and China, because Nvidia is also at the center of that battle. So, I'm really looking forward to see how those results turn out. It's also going to be a great indication of just how high investor expectations are, because a lot is baked into this stock at this valuation.
Bonawyn, I don't mean to suggest a crash is coming, but it was back in 1987 when interest rates were rising and the market was rising. And at some point, something happened, and bam, you had, I'm not saying, I'm not saying, but rising rates and a rising market do not usually go together.
Yeah, and this market has kind of defied logic. To put it quite simply, the thing is, if you really look at risk assets, and I'm not just talking stocks, I'm talking about everything. We're talking about stocks, we're talking about mortgage rates, we're talking about real estate, we're talking about private equity. You go across the board. We have been in such a low rate environment for so long that the valuations that you're seeing are fueled by the point that Dan made, valuations being DCF'd back to 2-3%. With mortgage rates now at 7%, right?
Yeah.
You can't help but expect to see default rates. But until we see credit really start to turn, until we start to see liquidity really get siphoned out, I will say one thing that I think is significantly different between 87 and now. I've got to go back quite a bit of time. I was, I'm not.
You were 8.
I'm not, more like 5.
Yeah.
Is that the liquidity on balance sheet? Companies make so much more cash now. The free cash flow generation, whether it's a company setting itself up to be taken private or vice versa, I think that is a slight difference here. And then you have all the passive investing, all of that liquidity that's in the market now. I think that's a slightly different dynamic from now and then. But I tend to agree, generally speaking, like something has got to give, being that low rates have fueled asset valuations for the better part of the last.
Yeah, before I go to Guy, did I put words in your mouth appropriately there?
Yeah, of course.
It was all right?
Like someone like you putting words in my mouth, it only makes me smarter. So thank you, sir.
So what do you think, Guy?
You mentioned 87.
I mentioned.
By the way, hello, Tyler.
Hi. How are you?
I'll give you an 07, because in 07, this was the last time 10-year yields got to the levels that we saw today, 435. So it's a 16-year high now. And this re-steepening.
Hard to believe it's 16 years ago.
Think about that.
Yeah.
November of 07. This re-steepening of the yield curve, and I don't want to be too wonky here and make people's eyes glaze over. It might be too late for that. But this is a bear re-steepening. In other words, it's re-steepening because the 10-year yields are going higher. That's not particularly good. And it's not just the U.S. Global interest rates now have been going higher as well. Just look across a swath of countries, and you'll see China yuan weakening right before our very eyes. Last time we saw it to this magnitude was August of 2015. And don't discount the importance of the weakness in the Japanese yen as they try to sort of continue to keep their bond market in line, which is not happening. All these factors put together, yes, the Nasdaq had a great today. Palo Alto should have been up given their margins and given that quarter on Friday. Nvidia's up, I think, because people feel we have to be in this name ahead of earnings, because God forbid we're not and have another quarter like last quarter, we're going to get fricasseed by our investors or shareholders. That's just people chasing, in my opinion. So let's wait till Wednesday and see how this shakes out. But I think it's setting up for a bit of a fall.